Hello, attendees in listen-only mode. How are you? How's everyone doing today? A couple of comments I want to make, market-related. Hello, Patrick, Arif, Zig, Windsor, 99. How are you? Okay, everyone, here's U.S. dollar yen. Everyone see the chart. We're at major trend line resistance. I thought it was going to stop around 12.5. Paulie made a great live call yesterday saying we were going to go to 12.79. Anyone who caught that interview, you know, and you were looking to short it, you waited till 79 based on our guess. Keep in mind we have the NFP tomorrow. Hang in there, Shinten. I'll get to it. Hi, Hasselhoff. Alex, how are you? It's into cloud resistance. Okay, it's trend line 2, Alex. Nice to see you. So we have NFP today, but if you're a trader that likes to hear the ice crack, I think there's still a shot. Still a shot for a pullback at least to 1160, and Grega's Elliott count still allows for it. You know, he was thinking up here around 77. So, you know, for it to extend 20, 30 pips off a wave count, that's no big deal. Still think that we could get this type of correction here.
Good morning, Dale. This is Steve. Good morning.
Yeah, hi, Steve. Why are you interrupting me?
Yeah, because I want to tell you, since you're mentioning Grega, we are going to have Grega with us within a few minutes.
Oh my! See, ask and you shall receive.
Yeah, exactly.
You could interrupt me anytime, Steve, for someone on the team that's going to be here. Because you know what? Everyone loved Nick yesterday. I mean, Twitter was lighting up. Thank you so much, and that you shared your work, and
listen,
people love.
I'm not the kind of person that you know, would pat you know, my own back in, you know, in a sense, because, you know, we are all part of the same team. But I honestly have to say that before we were selected, you know, who we're going to work with Elliott Wave, we were between two choices, and one of them is actually, you know, considered perhaps the most famous in the sector. But we said that you know, we like Grega more because he's a real talent. I mean, he's equally good, and he's also a great guy and a great person, and he never regretted it even for a single second. And Nick, what can I say about Nick? He's a great trader, and she's the best I've seen in harmonics.
Yeah, you're not bad. Who thinks?
I'm trying not to be.
Who thinks Steve Olge is? Yeah, your volume's coming back though, Matt. Who thinks Steve is really edifies them every time you see him present his charts and technical views? Give me a why. Here's my why. Why? And you know what? I didn't even know. Yeah, I didn't even know before I came to work with you guys, you know, what your skills were. So, I mean, that was a great surprise. And, yeah, I mean, what a team. What could I say? And you know what? The interviews, something I was going to talk about here. I know that, Steve, there were some complaints about, you know, Peter Temple, his gloom and doom, and what he's going to think, you know, what he's thinking could happen when, you know, the bubbles pop. But if you recall, and this was well over, you know, 3-4 weeks ago now, he was bearish gold until June. So I asked him about gold, and he said, well, that's why I think the market could still go up, because I'm looking for gold to go down in June. That was a great call. So, I mean, they're getting great input from many different sources. And
I totally agree.
That was a great call.
Even people that have some weird views or whatever, that doesn't mean that they also don't have a good insight in the market. I mean, yeah, when you invite somebody, you know, for an interview, you know, you're expecting some market views. Now somebody might want to add something else or whatever. That doesn't mean that we endorse every single view or whatever. But you know, this is also a democracy. I mean, you have to respect the people you invite, and that doesn't make them, you know, less good in their market perspective. And as you said, that was a very good call.
I give a lot of people who, you know, I may not be familiar with their work right away. when I bring them in to interview them because, I believe in, lifting people up that aren't as well known. But when I bring back a guy I've interviewed a few times, the reason is I've seen his forecasts manifest fairly consistently, and I want to know what he's thinking. So, I mean, I'm not just bringing him, see how selfish I am? I wanted to know what Peter was thinking. And up until yesterday where I thought, we might hold 1250 support for a bounce in gold, that's part of why I've had that bias is because I've seen Temple call the gold market. And, and there are other sources that are saying June is going to be a great time to own precious metals. The Aussie, someone else I know, the Aussie, probably around Nick's target down there in the mid 70.5 range is going to be a great buy. And it's going to be a summer, Stelios is really going to love the summer and the fall because it should be a great season for precious metals. So
I'll stop trading until then. Okay.
We'll go, it just gives you a chance to, you're a long-term guy.
Yeah.
You just, you believe in it long-term. I don't know, maybe you're in the $50 camp like a lot of bulls. I mean, some people are talking 100 or better. I read, people that are super bulls in the metals, $5,000 gold, etc. And not Peter Schiff, some guys that really think we're going to go there. But, it's an opportunity to, I wouldn't be short down here. It's an opportunity to accumulate, scale in, especially, I know you traded on paper, but I think everyone should have a coffee can full of this stuff buried in the backyard. Go ask your grandfathers if it would have helped them in the 30s to have some hard assets.
Oh, yeah. I have some family gold coins from decades back, that they keep. I'm not a gold bug, but obviously nice to have a tangible asset,
Yeah. So those are a few things I wanted to say. Paulie was great yesterday. Made a great call. We have Dana Lyons. This guy's a crack technician. He's not on crack. He's a very good. I watch his stuff. He's part of that See It Market group. You guys familiar with it? See It Market. They have about 5 or 10, mainly equity analysts, or indexes type analysis. So looking forward to interviewing him. But, we are in front of the NFP. One thing I did notice for guys that are still looking for 138 or so in Canada, and it's still real possible, but look how much crude is down today. And this is one of the first days Canada's not making much hay out of it.
Yeah, it's
so
I'd
like to see it take this high out because you see this high, guys? That's a confirmed high. But where the RSI is now, if we had one more push up, 780, something like that, this RSI is going to be way under 70. So, I don't know what, I'm fairly new to the team, but what I tell people to do is, I don't trade the Fed. I don't have positions before NFP because to me they're binary bets. They're black or red, and yesterday wasn't much. But I'd rather react to the reaction. So what I do on a Thursday is I look at my work and I say, if this happens, what am I going to do? So I know today that I'm going to be looking for a potential shorting opportunity in Canada tomorrow. Okay. So, and I've also noticed in Aussie, and this was a good, I was bearish Aussie last week and said, don't be short anymore. We'll have a rally. And we had this rally. I missed the short side here. I was bearish Kiwi, but I said early in the week we could rally back to 950, 960. And here we are pressing the lows. But I wouldn't press these right now, even the Aussie. I think Nick's going to be right on her long-term harmonic, but I'd be careful of being short down here. I'd rather slow rally back to 4.5 or so. So those are my calls. That's what I'm thinking here. If you like to hear the ice crack, I still think Greg's count's going to be right, and we are getting divergence in the yen. And I also think that now that the euro's, well, it's coming off a little bit, but if we could get to 980, the euro and the euro yen, you might get the correction you've been talking about in some of the euro crosses. But I still think we could get to 980 to even 110, just arithmetically here, 880, 940, right? See this range? So we start closing over 40, just tack on 60 pips, it gives you 110. So up there, I may try something. And euro yen could be something that I'd consider. And look at the yen. The yen is diverging finally under 70 at this high that we had up around 113. So we have the trend line here. And I thought I'd give like a rule of thumb on trend lines because, I believe, sometimes they respect them, but Steve and Stelios, how sometimes they'll interday, they'll break out through a trend line and people will go with it thinking it's a breakout. I really think trend lines I'm more skeptical of. I'd like to see 2 closes above the trend line to be convinced we have a breakout. So I want the market to prove that this is a legitimate breakout, and it doesn't do it by breaking out intraday, because you don't know what kind of daily candle you're going to end up with until the close.
First of all, that's right, Dale. But to add to that, don't forget that very often the first test of a trend line is failed. So, for example, you might want to wait for a second test and the breakout, or a breakout and the retest. Because, for example, let's take the example of USD yen at the moment.
Okay.
The place to buy that was at the channel support test. And the
that went away. Yeah.
Exactly. If you didn't do that, trying to buy, even if we break out for a few pips, trying to buy it now, will probably get you, at least in the short term, holding the bag. Because I mean, I can see 5 waves up. It's very likely that we will have some kind of a pullback first before a resumption higher, even if the trend has changed, which in my opinion is quite likely. I like the test of the support already down there, and I like the runaway gap. I mean, I like the structure. I like the fact that we had seen it some days ago that we had a huge uptrend and then a correction. You also gave, of course, the alternative that might be a large ABC, so we might see, a lower low. But personally, if I had to choose, I would say that we might go higher from here. But this is not the place.
How come you're not usually when you say that, you usually say, if I put a gun to my head.
Yeah.
How come you're not? How come you're not using your gun to your head today making these calls?
Runner of bullets.
Stelios, have you ever seen him talking about markets with a gun to his head? I don't like that image. How about you? I think
only when I'm the one holding the gun.
You know what? That's kind of the Jesse Livermore image. Jesse blew his brains out. So. I don't want you trading with a gun to your head anymore, Mr. Bogey. Is that,
okay,
do we have a deal? Huh?
We have a deal. It's a promise.
All right.
Nick is with us, by the way, if you heard.
Hi, Nick. How are you?
Hello, Nick.
Hey, everybody. Very good, thanks.
She likes
very happy with oil.
In the background. Hey, it's like we have a television show. All right, go on, Steve. So I'm interested going into the NFP. That was kind of the things that I'm looking at. There'd be a nice short maybe in Canada, because Canada's really not performing that well with crude still not at Nick's Gartley. What is there, Nick? Another $1 or so to the downside for that? So I think we're getting closer there for a reaction. I know, it's a top pick, and the yen's a top pick, and the euro's a top pick. So what can I say? I learned in an environment where I learned down is faster. So, you know, I do have a you know, kind of a predilection to, I always feel more comfortable being short than long. So, but there's always something to short, you know, there's something that moves opposite, right? So you could, you know, if you're bullish euro, you could be short Swiss, or, you know, so that's what that's what I see anyway. I think that the yen, I wouldn't be long yen up here, and you are starting to get some pretty classic divergence. But you know, the NFP, you know, comes in. People aren't expecting much. If they beat the number, yeah, we could spike above this trend line. But remember, it's a close, right, Steve? Because you know, I still do it. I still anticipate candles. Okay, I still do it. So, you know, we all break our own rules, but wait for the close.
I think it's, you know what I think it is? I think it's what your eye is trained to, because I used to see much better short setups than long ones. And I think, you know, because you're always looking for that pattern, and you know it when you see it. And I've had to force myself to see the long ones as well. But
or bottom.
Exactly what you mean.
I'm always looking for a turn, you know, I mean, that's the kind of work I do. You know, a 3 drive is a reversal formation, and I look for the RSI setup. So, you know, I'm always, you know, the contrarian of what's on the board, you know, especially after a run like this in the end. It's, I still think there'll be a shakeout, even if we are going to some of the numbers. And I could see how you guys are going to be right. Eventually, we're going to break out. But, you know, if you're not long, I think you'll have a chance to get long. I think around 1050, 1070 in the coming week. So that's my view. What are you thinking? Nick, do you trade, take positions into red numbers like in the NFP?
Yeah, I do, but not very big ones. And I only if I have a bit of a cushion. Like, I won't put it on a couple of minutes before speculatively, just because it can be so spiky. What I really like for big news events or NFP is if I have a level that we haven't quite got to yet, or a really big level that I'm waiting for in something, and we're not quite there, then I love it when news pushes it into it, and you can get a really nice trade if you leave an order there. That's probably
so you're reacting to the you're reacting. You're not positioned in front of it. You're reacting to it.
Right.
Yeah, that's. What's new with you, Stelios? What are you thinking? And also someone's commenting on palladium, Steve Volge, that I think it's gotten hammered or something, right?
Today it's more or less flat, but yesterday and the day before, yes, but we still don't have a confirmed high. And if this thing turns, as I told you, I'd rather have confirmation, because when palladium does technical turns, it has a lot of room to move. I mean, a lot of money to be made. You don't need to jump the gun.
Yeah. Okay.
You see that? I used another gun metaphor.
Yeah.
You mentioned the NOK, Dale. It's been my nemesis for the past few weeks. And there's a friend of ours, Spiros, who I think is listening in. He asked me to comment on Euro Norway, which is one of the trades I have on. And I mean, the main thing, I'm not going to go into great lengths about it, but the main thing that I look at and really puzzles me is that Euro Norway, for example, is around 5% from its all-time highs. And it's being really bashed. Norway is being bashed because of oil again.
Okay.
So I struggle to see why Euro Norway would be within 5% of its all-time highs, given the fundamentals of Europe and Norway. And we've said a million times about Norway, you know, how, you know, all their surpluses, their sovereign wealth funds, their unemployment, the GDP, everything is solid. Really, really solid. The only caveat with Norway is that their central bank seems to be going in and selling Norway and buying euros at certain levels. They did it at 9 on Euro Norway for some time, a few months ago. Yeah. So that's one thing that unfortunately influences the price. But for me, anything above 930, and we're currently at 948, anything about 930, 940, I sell. and I think it's a great shorting opportunity as a risk-reward trade. Again, my stop is at the all-time highs, which is around 10-ish or just below 10. So
Okay.
I
Well,
really like to trade.
I see a third drive developing here, Stelios, on the
Yeah,
4
yeah.
hour, and I'm looking at the daily. I see that the high of the move up there on the daily was, yeah, I think we could try 870, 875. I'm looking at the right instrument here, aren't I, guys? USD note.
Look, hold on. Well, I was talking about Euro
oil,
Norway, but
guys.
it's okay. I
It's
was
Euro
talking about
note?
Euro Norway. Yeah.
Oh, okay.
That's the
It's
one I
Euro.
was talking about.
Okay, because USD note looks like this could end up being a failure up here around 870. So
Yes.
possibly,
Yes.
you know, that's the way I thought I'd pull it up while you were talking about it.
But no, that's good. But it's one of my favorite trades, and I've
878, 872 has been multiple times a resistance zone. If you look at a daily long-term chart,
I got, yeah.
daily.
All right. Yeah. Okay. There's a 1 hour.
requires a lot of patience. That's the thing. You know, it can be very frustrating at times.
We're making, would it kind of, so it's kind of trading with Canada, USD CAD, with the weak oil is pushing this up?
Yep. Yep,
Okay,
exactly.
So it's kind of a proxy for, you know, an oil play just like USD CAD is. All right, well, I think we're close. And, you know, Canada's not doing much with crude making new lows here. So I think we're into the final stage. But, you know, one thing about the final stage is, wow, can you get spikes? Like, you know, yesterday I thought 1250 gold might hold. It looked like a 3 drive, and then they just accelerated through that like a hot knife through butter. But I think precious metal bulls should start to build a war chest for the summer solstice. That's my Nostra Pinkert call. Late June, get ready to become.
I love that you know what the summer solstice is.
Huh?
I
That's
love that you
Gans
know
stuff.
the summer solstice. Yeah.
Oh yeah, you know they go. You know, I'm in California. They have solstice parties. So you know, I love that stuff, Nick. You know, it's excellent, that stuff. I mean, you know, Farmer's Almanac, planetary oppositions, GAN, you know, GAN stuff. So yeah, you know, and I don't know if you've noticed it, but I've seen markets change directions within a few days of the seasonal change.
I think it's really interesting in the pound. I've got a chart somewhere. I'll dig it out for you with full moon and new moons overlaid on the cable and the FTSE, and it's really interesting how cable.
Yeah, I've been called a lunatic. I'm a lunatic. Yeah. All right. So, are you guys active, or are you doing anything here, or it's just kind of like a waiting game for me on Thursdays?
I got oil shots on. On a very tight range.
Yeah.
USD NOK has worked plenty of times on the short side as long as we're approaching resistance. So I think this is not no exception.
Yeah, look at this on the 1 hour. You know,
close to 870.
Yeah,
is a good short. I mean, it has worked like multiple times in the.
So tomorrow, so you know, maybe crude. You know, the NOK stops, go USD NOK stops. It's not, it doesn't have the same momentum like Canada, doesn't have the same momentum with crude weakness that it's had like it had last week. Just something I've noticed, not the same momentum. And we're getting close to those numbers, you know, Nick's harmonic, what, 38.80, something like that in Canada. So, you know, I think we're at near some inflection points for the currencies I've talked about. And, you know, no one can make on our crew a bearish case for yen, but many on the crew can make a bearish case for Canada. And Nick, your Aussie long-term target, I think that's going to happen into the solstice. The one you showed yesterday.
Oh yeah,
oh,
and
70-60.
Getting clobbered on this commodity weakness.
Yeah,
because it's everything: iron, nickel, gold, copper, energy, just ugly.
Yeah, but maybe we get a higher low. And let me pull it up. Let's pull out the. So a day like this, we could talk about things like this. So that's.
So right here where we are now, 73.85, 73.70, 73.85. I have a bunch of support, yeah, for
me too.
261.8. Yeah, right here for Aussie. So
yeah, and then
we'll see, you know.
Yeah.
61.8s can bounce much more than you expect, at least back to the 38.2. So that's would be back to 75.36, and keep your kind of choppy channel. So
75.36 all the way up here.
yeah, that would be, yeah, if we reversed here, that's what I'd be looking for.
True,
Okay.
but I think that we first have to go through, if we bounce, first have to go through the hurdle of 74.50.
Yeah, the pivot in the middle. Yeah,
exactly. Which is also the 50%, but also, you know, the area we were trying to create a low failed, of course. And I think that if we see a bounce, the first area of sellers to emerge again will be 74.50. As Nick said, if buyers manage to penetrate that zone, then we're going for the 75.20 to 30 area, which in essence will keep us from forming a higher high. So as long as we stay below there, the pair remains bearish. Personally, I don't find it easy that it's going to go above 74.50. I mean, the formation that broke down was, you know, exemplary. I mean, it was very clean, and I think that any bounce to 74.50 is a great shorting opportunity.
Yeah, and I think you're starting to get some divergence here, Steve, so I think it could happen. All right,
yeah,
so,
of course,
you know, and that's right back to some moving averages up there.
Of course it can. I mean, as Nick mentioned before, some markets are extremely overextended at the moment. I mean,
yeah, like
overextended.
Gold.
Yeah, exactly. Silver, for example, I think this is the 14th consecutive lower day for silver. And if you think about it, nothing.
It is, I've been counting them. Yes, it is.
Yeah, nothing amazing has happened. I mean, suddenly the metal has been sold for 14 consecutive days, and somebody would think, you know, that 14 days ago something great happened, something that influences the silver market greatly. But that's not the case. I mean, how can you sell after 14 down days? I've actually started buying, I have to say. I'm not suggesting anybody to follow this. This
so you're only looking for a 1720 pop. You know, you're not. You know, this is a trade for you. You're trading it at extremes. You're scaling into it. You're not using a lot of margin.
Exactly. So, first of all, I'm never using I'm never using leverage. Never.
Okay. Oh, so I don't like it. Okay. So you know, you don't care about a 20-cent move.
No. I'm willing to buy all the way. We had the discussion yesterday night with Nick as well. She has a SARC pattern from 1590 something. Nick, do I remember right?
Yeah. But I think I caught that. But eventually, I think Nick's looking for 15.
Yeah, she's looking for 1530 perhaps, which is a guard lay.
Yeah.
I'm willing to, you know, I've started nimbling in, and depending on when we bounce, if we bounce from lower, I'm going to be looking for 1680. If we bounce from here, I'm going to be looking for 1720. So, you know, I have plenty more entry points below, and I will build an average at around 16, perhaps even a little bit lower, and look for a bounce. But this is definitely a contrarian trade, okay? So, you know, people should be very careful and definitely not go into it if they like the trade as well with leverage, because that can chop you up. I mean, we're obviously in some kind of an impulsive move lower. So, you know, the trend in the short term is definitely lower. There's no question about it. The feeling that the leverage song is coming.
Let me ask you this. Does everyone have that song? Do you ever hear yourself saying that to yourself? Playing that song in your head? You know, use less leverage if you trade the market.
I didn't know that one.
You ever hear that in your head? I mean, people have heard that song and then they can't get it out of their head. This one, Nick, you've heard it.
No, I've only got one song. I've got a dollar yen song, but that's it.
Yeah. Well, here's a FaCe theme song. If you're looking for a good place, because you're lonely, you ought to hang out in FaCe. No idea what to do? Hang out with us. Say you're living at home but want your own house. You should be in FaCe before you click your mouse. You don't get just one view. In fact, you get quite a few. Do your intelligence gathering in FaCe. Give me an F. Give me an A. Give me a C. FaCe is the place to become an ace.
And speaking of aces, we have Gregor with us.
Hey guys.
Gregor, you like it? You like
Hey,
it?
I'm gonna go. Oh, Greg, I'm gonna sit and listen now.
Huh?
Nick,
Gregor, if you can speak a little bit closer to the microphone, mate.
who, me?
Yeah.
Yes.
Better now?
Better, yes.
Okay.
Yes.
I'll give Gregor the naked presenter. Hi, Gregor. How are you, bro?
Doing fine,
you
doing
doing?
some web accounts, tracking this gold.
Okay.
But actually, I'm not really
You were short. Didn't you have a short pattern on into yesterday?
Long pattern.
Yes, it was long.
pattern? Oh, okay. It was invalidated.
I expected a bounce because it was so deep. I still see that open gap a little bit higher, but as things stand right now, I just think it's better to focus on what is actually happening and maybe adjust some of the things. So what I have to do
Why
is...
don't you share your screen so we could see it?
Yes, sure. So actually what I found it is that as long as gold and silver are breaking down, do you see my screen now?
Yeah, we got it.
Okay, so as long as the gold and silver are breaking down, I think that better opportunities are on some commodity pairs. Aussie dollar, New Zealand dollar are looking very bearish. I think there's also 10-year US notes which are moving to the downside. Actually, I have here this overlay chart. Can you see it?
Yeah.
So that's a 10-year US notes trading lower, and here at the top is Aussie dollar. And also we have a gold trading down. So at the moment, I think it's better to focus on current sentiment and be aware of potential opportunities on Aussie. So what I'm looking at is actually this sideways price action here from August of 2015. Actually, we didn't go far. Okay, so I think that this can still be only a corrective pose with an ongoing downtrend. So if metals will stay under pressure, I think there is opportunity to make some money on the downside. Also, from minimum perspective, I think that these trend lines support the lower side of a trading range. If we assume that this trading range will continue, I think that this lower trend line could be tested. So for the short-term trades, what I'm looking at is here I have this hourly chart, as you can see, and we have seen a very strong drop over the last 48 hours or so, which is still not in 5 waves. So for the short-term bounces, I think that could be interesting to look for more weakness after pullbacks.
Interesting.
Yes, so I think it's really better to stay with current sentiment and not to fight something until you see a 5-wave development to the upside, and clearly that's not the case. So Aussie dollar is definitely on my radar screen. New Zealand dollar also fell below important trend lines. I can show that one as well. Here's this.
Yeah, so in fact, Rugged, we were talking about the potential of a rally back to 4.5 or so for a good shorting opportunity, and I think that's what you had in Aussie.
Ozzy, if we go back.
It was about 74.50, where two would complete.
Yes,
Yeah.
actually I have two resistance levels. Let's assume that we will see a fourth wave bounce similar to this wave 2 correction, but obviously I will be expecting something more complex. I would definitely look at either at this swing high or maybe at this swing high if we see a little bit deeper, deeper retracement. But I would stay bearish as long as we are beneath 7510.
Got it.
So that's for Ozzy.
Grega,
Yes.
if I may make an educational comment here for people, you know, people that think that an Elliottician like Grega is just taking a daily chart and, you know, pinpoints a few, you know, a few areas and a few waves and puts labels on them, you're very mistaken. Elliott wave analysis is a bottom-up analysis. So he starts from a 1 hour chart to a 4 hour chart to a daily chart to a weekly chart to a monthly chart. This is amazing amount of work. You can't even imagine. I'm telling you as a person that understands and follows Elliott wave, but of course in a much less extent than Grega does. This is the way he gets confirmation for moving to a higher time frame. Am I right, Grega?
Yes, that's correct. But that's more from analytical approach. From a trading approach, actually the bigger cycle, the bigger patterns are not so important. You know, when I was trading very actively and not doing much analysis on so different markets that I'm doing today, I had more time for trading, and then I was just looking at sharp price actions and waiting on pullbacks. And normally I was looking at the 4 hour charts, and I actually didn't care what is the structure on a weekly chart, because to me important was what will happen in the next, let's say, 48 hours or maybe 3-5 days, because that was my plan for trade, okay, time zone. So actually what was happening on the weekly chart, what is unfolding on the weekly chart, in which degree of a trend we are, actually that didn't matter much. But as an analyst, I definitely want to share my views on the longer term charts, to make it clear where is 1 hour piece of the puzzle on a bigger time frame. So now I will, where we finished earlier.
You're on Kiwi, buddy.
Yes, on Kiwi. So Kiwi, New Zealand dollar. Actually, this break to the downside is quite interesting. Here, we fell below this trend line, this channel line, and notice that we tested it in the last, it was this week? Yes, actually yesterday. We tested it and now we are again at the low, so it looks like there will be some very strong bearish pressure coming in, so definitely I would like to wait on a pullbacks here as well. But I think that Aussie dollar is a little bit better looking pattern on the short-term basis. But in either case, as a trader, I will wait and look for 3 wave bounces on the intraday chart. So if I'll see an ABC rally, there can be opportunities to get involved in the short side, definitely. Okay. So Aussie dollar, New Zealand dollar, this would be my primary pairs for shorts on a pullbacks.
Okay. You think that a lot of these targets, at least, you know, like on the daily time frame, could complete by, say, in about 7 weeks, 8 weeks?
Where, on which pair?
Either. You know, kind of goes with the precious metals too, that, you know, they're,
No,
I was thinking late June.
Yes, actually, I'm not really sure, if I would say honestly, where the pressure metals are currently headed. We can still be only on a temporary pullback because traders are getting more and investors are becoming more and more bearish. So normally I'm nervous when this happens. So I would not trust this gold move, metal move just yet, because tomorrow we also have, I believe, non-farm payrolls report, and any trend changes can happen as well. So definitely on a gold side, I would be really cautious. So that's why I better like to stay with Aussie rather than with gold. But if gold will stay under pressure, watch for Aussie pullbacks.
Okay. Thank you, Greg.
What you said, Greg, by the way, I have to add, Dale, the DSI for silver has now dropped to 20. Any reading below 25 or, 20 at most, or the opposite, 75, 80, is an extreme reading. And just to give you an idea, the average reading of DSI during the past 2.5 weeks was close to 50, which was like balanced. And within a couple of weeks, we've moved to 20. So it shows exactly what Greg is saying, that the sentiment is leaning very fast towards extreme bearishness.
Yeah, well, I remember Blake showing it a few weeks ago. Gold was 80. And I said, isn't that an extreme reading? Where's gold now?
Let me tell you immediately.
One other point, the shares were also a reason I was negative. They were lagging dramatically in relative strength, the GDX and the juniors. And for a while yesterday, when gold was getting hammered, the shares were actually steady. And they didn't. So pay attention to, things like Nugget and GDX, and look for a day where gold is down and the miners just aren't, they're just not under as much pressure. That'll tell you something too.
Gold is currently...
Give me a why if you guys understand that I'm a believer that the shares lead the underlying commodity. I'm not the only one who thinks that either, because it's not an original thought. None of my thoughts are original thoughts. They all come from God.
Also, New Zealand can be also very interesting against the Japanese yen. I just think that there is a dollar-yen trading potential near resistance. Stocks can also, I think, can see some pullback to the downside. So if this will prove correct, then New Zealand dollar could see more weakness against the Japanese yen here on the 4-hour chart. I think there's a pretty clear pattern. We have 5 waves development, I believe, to the downside. Notice that current bounce is in 3 waves. We already have some overlaps here in first stage of this bounce. So it looks like that we are in a corrective bounce, not an impulsive one. And we are at the former wave 4 regions. So it looks like pretty interesting for more...
Aussie yen weaker? Aussie yen have a weaker structure, Grega, than Kiwi yen?
Let me pull Aussie yen up. We have so many pairs. I don't track every pair because
it started selling off pretty good early in the week.
Let me check. Actually, it looks like we have a three wave bounce. Let me label this very quickly. Even here we can label 5 waves down. So let's see, wave 1, 2.
And we're gonna make a trip under 80.
5.
78. Yeah.
I will remove this one, and then we have a...
Look at this. Elliott analysis on the fly, live in front of your eyes. Ask and you shall receive from Grega Horvath. You don't see this stuff anywhere else. Nice.
Actually, we have a very nice development at the moment.
Yeah.
Clearly, three-wave bounce. Wave C did not move anywhere near towards the upper trend line. Normally, an ABC recovery, an ABC structure will complete itself somewhere between these trend lines or around the upper trend line, and normally will not exceed much the upper trend line because, as you know, wave C is not an extended wave. So this upper trend line is normally broken when you're tracking an impulsive rally. Let's say wave 1, 2, 3, 4, 5, because as you know, wave 3 is extended wave. Okay, but this did not happen here. We came back to the downside. Now we are breaking below this lower trend line. Also, this decline is looking impulsive here. So I would not be surprised if we'll see back down maybe fill this gap and then even retest this April lows. So I think
Thank you,
this
buddy.
one is looking very
So
interesting.
both Aussie yen and Kiwi yen both look like,
Yes, both.
you never know. Yeah.
Yes, both are looking.
Grega, since we had a look at silver, since we talked about silver before, you want to show people your wave count for, anyhow, as you said, it's an open, it's under discussion how exactly it's evolving at the moment, but your scenarios about silver?
Actually, I can show you scenarios. I think I have them on gold. I can share gold maybe. I have to, actually I am tracking these two possibilities still. One is that we are still going higher for this wave C and wave 3, but this current decline is really concerning. So that's why we need to bring on a second idea, which is also that this was only a free wave bounce, that we are headed lower. Now the only question is when I would, so actually I'm trapped between two counts at the moment, and I really have to wait on more price data on the lower time frame charts to get some confident price structure which will confirm in which part of the grid we are on a higher time frame. For example, if we will see a strong 5-wave decline on the lower time frame charts from these April highs, then clearly I will have to go with discount. If tomorrow, let's assume that we will see an impulsive bounce after non-farm payroll support, then I will still leave a chance that we are headed higher for wave C or wave 3. So
you know, Grega, if you get your first scenario, it looks like you have it like around 900 for a long-term count on the gold. You know that was the 1979, 1980 high before we had a 20-year bear market. We peaked at 880, and that was during the Russian invasion of Afghanistan, and $50 silver. So, you know, at that point, it just, you know, kind of triggered a memory for me, that 880, because I was in the business. So it looks like that's...
You were in the business, but I was not born yet.
I knew you'd rub it in, punk. I know.
You and John Rambo were in the business back then, Dale.
Who? Me? I used to trade wheat with Joseph of the Bible. That's how I got started. In commodities with Joseph. So, yeah, good to be young, Grega. That's all I can say.
Okay, thank you. Okay, guys, I will have to leave you.
Good to have wisdom too. So. Okay,
so Gregor, in essence, the verdict is still up for which of the two alternatives we will have about the precious metals, eh?
Yes, I still think that there is a chance for a move to the upside. Maybe we'll retest 1200 and then we see to the upside. So we will see.
Yeah.
As I said, I need to be a little bit more patient, wait on price developments on the lower time frames, and then we will see if we get something interesting.
Greg, I saw an Elliott count that says that we're in some type of, I don't know, ABC wave 4 in Elliott in S&P. You know, the failure for S&Ps to make new highs, if we do pull back, it's still a 4. And there's still a, you know, more
yes,
upside.
On the lower time frame charts, yes.
Yeah.
Yes, I think that we are in a corrective wave 4 here. Maybe this wave 4 can even unfold as a flat. Let's assume here that this wave 4 can be a little bit more complex, okay, because we somehow this wave 4 should be similar compared to wave 2, okay. Definitely this, let's assume that the wave 2 would be finished on March 27th. Very small wave 4 actually, not wave 4, wave 2.
Yeah,
wave 4 would be then very small compared to wave 2, okay, and yeah. Normally that's not the case. So what I assume it could happen is maybe making a flat correction here for wave 4, and then we see a bounce to the upside. Okay.
Thank you. Thank you.
But still, there is a sideways price action, definitely correction with an ongoing uptrend. So bottom line, there is more upside coming on the S&P 500, I believe. Okay. So guys, I will have to leave you. I have to update some charts. So we'll join in maybe tomorrow as well if I see something interesting after the US
Thank you,
conference.
Greg. That will be great, mate.
Yes. The only question is if data will confuse my charts or no. You know that.
Thank you, Grega.
Okay, thank you.
All right, buddy. So, Steve, I need a break. You want to talk through it, or should I put?
Sure. I can have a look at a few charts. Actually, Velu, that is recording the webinars, told me yesterday that somebody asked about a couple of things that we didn't notice, so I can definitely
Okay. Thank you,
have
buddy.
a look. Yeah, my pleasure.
Good. You're the best backup guy I've ever had.
Thank you. Okay, first of all, back here I broke the heart of my friend Stelios. This is Euro NOK. Can you see my charts, by the way, guys?
I see him on my way out.
Okay, good. So Euro NOK, we had this discussion with Stelios here. I agree with him that NOK is a currency of a very strong economy, but as long as it's manipulated partly by the Norges Bank, I'm just looking at the charts, and the charts here told me that the rejection and retest of this channel, or anyhow trend line, call it, was a bullish event, and we actually broke through it and rallied that like there's no tomorrow. First leg will equal the second leg at 953.80, so this is an area we might look for a retracement. It's obviously seriously overbought at the moment, but that doesn't mean much because we don't even have a divergence yet. I know that not many people track this. I just wanted to go briefly through it since we spoke about it before. Now this is USD NOK. Just want to show the significance of the 870, and there is a chance that we are in some kind of an ascending wedge as well. So obviously as long as this area holds, and keep in mind there are some currency pairs like this one, look at it. We've been in a broad range since 2015 with the exception of this false break higher, which was an ascending wedge and manifested very nicely. We actually took that opportunity back then, and since then it's been extremely frustrating. But this is not the place to belong. It's more than obvious. We also had a brief discussion about USD CAD. I see some confluence of resistances here. If you see, which I don't have it at the moment here, but I can put it very fast, we are currently at an area that is the 161.8 of this, 127.2 of this, and this ascending channel. All of them are gathered within roughly 50 pips. Also added the fact that we have 2, 4, 6, 8, 9, 10 consecutive days plus 3, 13 out of the last 14 daily candles are white candles, and given the extreme RSI reading, I'm not saying that this thing is bearish by no means, but definitely a pullback should be coming soon. I already see some momentum loss here. Perhaps an overthrow, if we get strong NFPs, will mark a top at a Friday. You remember we've talked about many times that you might see tops or bottoms at the end of the or a start of the week, or a month, or a year, obviously. So that coincides very nicely. We might get a reversal or an exhaustive push higher, perhaps with NFPs tomorrow. So that's also one thing to monitor. What else I wanted to talk about? Obviously, because many people are asking. Somebody asked yesterday about USD ruble, and you're going to ask me, why the hell do we care about USD ruble? You know, most people don't even cover it. I'll give you a good reason why, and the reason is this. Obviously, in a very strong uptrend, we obviously broke below it, but we're currently seeing very clear signs of a reversal. Why? Because we obviously had the first sign of a reversal is momentum loss. We had momentum loss in the downside, which is also very apparent with RSI. We have the first time that we breach the level 60 of RSI since November, that we were up here. We have this descending wedge, very clearly defined descending wedge, which we're breaking above, and even the 50 DMA that we just broke above. To me, those are great signals that the risk is no longer on the downside, but it's actually to the upside. Obviously, a last confirmation that is missing, but that doesn't mean that if you find the risk reward, you should wait until then, is to form for the first time after January 2016 a higher high by penetrating over 59.5. Okay, also we had a 50% fib here, as you see. So in my opinion, USD ruble seems to be turning, and the risk reward for such an effort is definitely here. Somebody asked yesterday about it. I didn't see it on time, but that's why we have people working with us. They told me that somebody asked, so I wanted to go over it. So USD ruble, in my opinion, presents a great setup, a great opportunity, and it should probably be under your radar if you're open to the idea of monitoring more things. Now, USD CHF, still boring. Somebody else asked about it. Still boring, still within a triangle, still very well defined resistance and support zones. It's even more boring than Euro USD, because oppositely from Euro USD, what happened is the following here, is that we had a jump, we had a gap in Euro USD, we had a gap here as well, but we filled immediately the gap because the fact that we got positive result in the French elections also came as a huge relief to the Swiss franc. So we got dollar weakening, but at the same time we also got the Swiss franc weakening, because the biggest fear that Le Pen might have done much better in the first round of the French elections, which would perhaps indicate that the fight for the second round was going to be way closer than expected. We got rid of that possibility. Still, the polls roughly balance around 60 to 40. So Macron is by far the favorite to win this. And I'm not saying that in the sense of Hillary Clinton. If you remember, I had said since the beginning that I believe that the French elections are not going to prove to be a case of Brexit or a case of Hillary versus Trump, mostly because French people as a society are more inclined to believe, to feel like they're socialists. So for them, far-right movements like Le Pen's, they do of course have they do gain more popularity by the time because of immigration, etc. But still there is a bulk, there is a critical mass of the French society that would never vote for it. They would rather vote for anything else but it. Dale, do we have a guest today?
Yeah, he'll be here in a minute or so. You could keep going.
Oh, okay, perfect. I don't want to, chew up your time.
Yeah, you're not.
Okay,
you never chew up time, buddy. As long as you don't put a gun to your head anymore.
No, I won't. I promise. Okay,
because time is our most precious currency.
That's the only sure thing, and it's the only thing you cannot buy, eh?
It's the only thing that's gone forever.
True, and you can't buy time. Okay, you can indirectly buy time in some occasions if you have the money.
I've seen movies based upon that being the currency. Justin Timberlake was in it, where they were that was their currency, and they had something on their arms that showed how much time they had left.
Actually, I've seen that movie.
Yeah, and all their transactions were for they would be debited or credited time.
Yeah,
So,
I've seen that movie actually. Yes,
yeah.
and they never grew older as long as they had the currency to buy time.
Yeah,
You
That would
see,
be nice.
you see why having a webinar and a community is great. Somebody just wrote about USD/SGD, and he said that it looks better. I don't know if it looks better. I like that bottoming pattern more, but this is also looking, very nicely. Yes, it looks like we're breaking higher from the 200 DMA, from a pennant actually, because this is a move higher. This is a pennant. Let's see what kind of a retracement we got here. I'm thinking that it was roughly between 38 and 50. Let's see. 50 from the 50%. Yes, actually, thanks for bringing that to our attention. It looks great. Singaporean dollar, that is, for whoever doesn't know. Yeah, this is actually, I'm going to do some technical analysis afterwards on it. Thank you very much. Yes, this looks like it's breaking out as well in favor of the dollar. Indeed.
See what I mean about having more than your two set of eyes and even the team, what you get from your community?
Yes, very, very true.
Really, it's an edge. So, we have guys in here in our community, because I used to have more interaction during the sessions with them because, I didn't have the numbers I have now. But I've watched them and make calls, live calls, and a lot of these guys are very consistent, and they're, it's interesting. We have a lot of professional traders that come in here. They're pros, and they come in here to not only share what they see, but, they get an edge by seeing what others see. So it's a
great benefit for sure.
Pretty cool.
It is a great benefit. And for example, yes, this is a great trading opportunity. Thank you. Thank you very much. And you see, we've been in a clear and clean up trend since, no surprise, bottom is at 2011, as many things had bottomed back then. So yes, this is very nice, at least for a bounce, at least. Perhaps to here, 141.60. Okay, I'll do more technical analysis when we can view it, on another day.
Yeah, that's really an interesting looking formation.
Somebody is asking about the euro yen. Let's go through that as well before you get your guest over.
Here. I'll let you know.
Euro yen is a real beast. Now he's testing this high. We wrote yesterday that this is the next resistance. And then obviously we have the 124 level, which was this high. I also see here 5 waves up, and it's very clear. 1, 2, you can even see it on a daily chart, which is not meant to give you short-term counts, but you can see it. 1, 2, 3, 4, 5. This shows me what? This shows me 2 things. It first shows me that the trend, this is an extra confirmation that the trend has changed. And at the same time, this also shows us, and look at this, the projection of the 5th wave for equality of the first wave is at 123.65, so we have another target. So we have resistant targets between here and 124, and we should see at least a short-term pullback. Something from a basic technical analysis perspective, something like that would look very appealing, something like this. Right? A very nice area, a very nice level to look for a bounce. It acted as resistance multiple times. It also acted as resistance here. We needed 3 attempts. During the 4th attempt, we actually penetrated through it, which also points to the significance of this trend line. So since we managed to move comfortably above it, why not just retrace to this, which is going to be roughly, let's say, 120, 150. That's a great area to look to align yourself with the trend.
Yeah, we'll get a pull there. Nothing goes straight up forever.
Oh yeah, for sure. And as I told you, I see 5 waves up here. It's this short-term impulsive move seems to be at its very, very, very last stages.
Okay, Dana, are you in the house? Because I'm typing your name to try and find you. Dana said he's waiting for an organizer. I don't know what that means. He should be in the room.
Ask what kind of name they registered with, and we can.
I did. I'm communicating with DMs on Twitter. Let's see, Dana Lyons. I don't know why it's not showing up.
Yeah, I don't see it either.
Yeah. Yeah.
Ask her, can she see the webinar? Can she see the screen or whatever? Because if she can't, she's not here, obviously.
Yeah, he's waiting for an organizer, so he probably didn't even enter. So I just sent him another message. I'll give it another 5 minutes.
Okay, so anybody that wants to check out another chart? I'm just checking at the questions.
He's saying he may have gotten here. Chris is saying that's the message you get if you log into a meeting that isn't active. So do we have it scheduled for just an hour, and then after an hour people can't log in?
No. And it doesn't matter when you have it scheduled, as long as the room is on, even if it's out of scheduled hours, they can log in. Make sure they have the right link.
He's got the right link.
Okay. I can assure you, I see people logging in all the time.
Yeah, all right. I believe you.
Aussie Kiwi. I'm seeing at questions here. Aussie Kiwi. Yep, Aussie Kiwi. Today's candle is interesting. Breach above the channel. A retest of this zone. Aussie Kiwi still looks healthy. I know that we've had 2 strong down days. Today's candle, though, is a pin bar for the time being. Nothing has changed for me in Aussie Kiwi. As long as we remain above this descending trend line, this one, let me change its color.
All right, I just got a message back from him and says connected to webinar.
Okay.
But I've typed his name and I still don't see him.
Perhaps it needs, a few seconds to populate. Because, when they connect to the webinar, they need a few seconds.
Yeah.
Give it a few seconds and try again. So Aussie Kiwi still looks healthy to me. I mean, we've still broken above here. Yeah, there is no reason to be bearish yet. I mean, we need to see way more to turn bearish on Aussie Kiwi, and definitely as long as the 200 EMA and this descending trend line holds. Nikki, somebody's asking for Nikki. Let's look at Nikki. Oh, there we go. Yeah, guess where Nikki found resistance?
Right here.
1, 2, 3, 4. This is the 5th attempt to break higher, and I remind you that this is also the 78.6% retracement of this move of the 2015 high. As you understand, this is not the place to be long, but you should be careful, because if after so many attempts we actually breach above it, we might have a situation equivalent to that of Euro-Yen. We might get a breach above it, and then you should wait for a retest to actually buy the breakout. For the time being, the reward to risk ratio tells you that if you are to do anything here, is to be short. Obviously, if you want to go long here, where are you going to put your stop loss? I mean, it's as simple as that. Where? Here, and what's your target going to be? I mean, on the other hand, if we break higher, the next resistance to watch is this. I mean, it's very clearly defined. So if we confirm a breach above, then we're heading for this area around 20,000. So as you see, you can even see it from a geometrical perspective. There is no risk reward, because let's say you want to be long here. Where are you going to put your stop loss? I mean, worst case scenario, you're going to put it here. I mean, best case scenario, which is not best, because you can easily break below this level and still be at a new impulsive move higher. But let's say you put it here. as you see, the distance from here to here is larger than the distance from here to here. So the risk reward isn't there to be long at current levels. I repeat, the secret is at current levels. And as you see, this is not only a horizontal resistance, this is also a resistance from this ascending trend line. So this is a confluence of a fib level and two trend line resistances, one horizontal and one ascending. So I think the Nikkei is a very clean chart at the moment. Another friend is asking for GBP Aussie. Let's go through it. Very stubborn. It has even exceeded, what I had here as a first target. We were long, way lower, 1, 2, 3, 4. I expected that this here, because, of course you might get false readings, but let me explain why I've drawn in this chart that perhaps this was the top, because this was an evening star formation, those three candlesticks, usually a very powerful and statistically proven reversal candlestick pattern. Of course, in this case, it didn't play out. They don't always play out, but I think that we should get a pullback rather soon. Now, where that pullback could be, if we pull back soon, we could go all the way down here, but if we extend a little bit further, which means that we've gained some distance, and this will even look like a more healthy uptrend, then we might not make it all the way there, and then we might get a target that's going to be in this zone. Okay, so somewhere here. So if we extend a little bit further, then you should expect that a pullback might not go below 171, 170, 50, something like that. So that's the view.
Arman is saying that there's a 3-drive pattern developing on the 4-hour. Hello, Arman, my good friend. Hello, Baki. How are you? So,
yeah, very likely.
I have it up. I have it up. The Mo is at 80, though. The RSI reading's at 80. But it has a form, but the momentum's a lot for me. I think it has to do some work before I would.
Yeah, exactly. You know something, people, when something breaks and breaks decisively, you get a very strong impulsive move, and then people are searching for places to enter the trend, but they're afraid that there is no risk reward, which is correct. This is the way to do it. I mean, if it runs away from you, it simply ran away from you. It's okay. It's okay. I mean, you can't catch all the trades, and don't feel bad about it. I mean, when I was much more fresh in trading, I was getting really frustrated when I was watching something, and I saw it break out, and then I said to myself, okay, you're going to buy it after it pulls back there, and it never did. And then I was frustrated because I was monitoring something, and then I never got into it. But those are some of the mental hurdles that you have to bypass. I mean, it got away
what's a nine-digit ID number for our webinar? That's what he keeps asking for. I've given him the link. It says link is not getting anywhere, but signed in, trying to sign in, then join.
Here it is.
If you have the 9-digit ID.
Here it is. I'm going to give it to you now, but nobody else had the problem before. Okay, I put it on Skype. This is it.
Okay, thanks, Steve. All right. Because it's already running kind of late anyway.
Yeah, this is the 9-digit ID.
Okay.
Okay, so what I was saying is the following. If it ran away from you, fine. I mean, I understand that you might be hesitant afterwards because you want to be with a larger size. You might be hesitant to buy a pullback because currently you're thinking, okay, so what if it pulls back here and I buy it, but it decides then to travel all the way down here, which is 400 pips earlier. I don't have I don't have the account to actually afford getting down there. The answer is simple. If you cannot go unleveraged, here and add here, then just don't take the trade. Or perhaps you don't have the size of the account that is fit to your trading style. You know, there are a lot of people that are looking into trading with, you know, small accounts to make a good income, a good living out of trading. But that's not feasible if your account is small and you're not a scalper. I mean, if you are a medium-term trader, which means that you have to have leeway for you know, larger stop losses, or even getting in a trade in portions and having specific zones and being able to be in the red for some time before you actually see the thing you know, turn to what you expect to be the trend. Then you don't have the right size of an account for the trading style you're looking for. And you know, you have to be honest with yourself. I mean, instead of trying to achieve something without having the proper tools, you need to make an honest assessment of what you can achieve, and if your trading style is fit to go along with your account size. And those are decisions that you need to make, you know, not being optimistic, but rather when you make those kind of assessments, you'd rather err on the pessimistic side than the opposite. So any other charts? We had a look at the Nikkei, we had a look at GBP Aussie, we had gold. Somebody asked for gold actually.
Let's see if Daniel's in here again.
Yeah.
So the yen is coming off that trend line, Steve.
Yes, yes, I'll show it afterwards. So USD against.
I'm not talking to you, honey.
Look at this. We have a break of the channel. This is obviously not good. The rejection here was critical. When I saw this rejection here, I thought that, you know, the possibilities of a bearish reversal are very high. But as I said before, and I don't regret this, as long as this zone was holding us, there was no confirmation. Now, obviously, things don't look good about gold. Now, where would you buy it? That's a good question. Currently, I'm not interested in buying gold because I'd rather buy silver, but 1,209 is the 50%. Then we have this area here, 1,194. To be honest, I don't see anything I like in gold. And one of the reasons I don't is this. Let me show you something that probably most of you are not looking at. This is the ratio. This is the ratio of silver.
Gold-silver ratio.
Yeah. Actually, it's the silver to gold ratio for this instance. We had a breakdown and we have a huge move lower. I think that we're bound for a retracement, which means that currently, if I wanted to buy a silver or gold, I would be buying silver as I did, because this is overblown, seriously overblown. I mean, RSI is below 20, and you know, we even had this spike down here, which looks like exhaustive to me. This huge candle, the spike, which came, you know, around previous levels. So I'm not looking to buy gold at the moment. It seems to be at earlier stages of a breaking down, if that's what we end up getting. But as Grega mentioned before making more serious decisions about gold and silver, I want to see the reaction to the market tomorrow, and you know, see how the week closes and make plans during the weekend. I think that's the best plan for gold and silver. And that as we've said many times in the past, you don't need to have a strong opinion about every single pair you see out there or every single instrument you see up there. If something does not fit your criteria, bypass it. Ignore it as long as, you know, you have other things that you're monitoring.
All right, Steve, we're going to have to, I believe, cancel Dana. I put a link on what he's seeing in our Skype box.
Okay,
this
mate.
is what he's getting from the link. So we'll have to reschedule that, I guess, because he can't get in. But you know what? I have an idea. I don't know. Tell me what you think. Guys, I'm going to interview myself for about 10 minutes. You guys ready for
That's an excellent idea. I want to hear that.
Yeah, I've done it once before, so bear with me. Oh yeah, Reeve knows it? Okay. All right, so
Okay,
Dale,
thank you everyone. And I just wanted to say thank you everyone, and you know, you have the microphone now, Dale. And take the screen back as well.
I'll take the screen back? Okay, I'll take the screen back. Show my screen. Okay. Okay, everyone, our next guest is going to be Dale Pinkert. Stand by for Dale. Hi, Dale. Welcome to ForexAnalytix. So nice to have you with us. I'd like to start off by asking how you got involved in the industry. How did fate take you into becoming a trader? I'm very interested in what your journey was like and how it started. Well, thank you, Dale, for having me here today. I really appreciate you having me here for this interview. I'm wearing my ForexAnalytix hat, and as you can see, I'm not a young trader anymore, but I'll tell you about my first day. So I graduated from Northern Illinois University with a degree in journalism and minor in speech, and it was in 1975. And we were in a recession, and I'm out there, oh God, my carefree days are gone. College was so great. You had your own place. You had a ready social environment. You had rock and roll, and I did okay in school, but now I had to make a living. Okay, so a friend of mine that I went to school with said, Dale, because I'd only gotten offers like to sell insurance, nothing really turned me on. So he said, Dale, why don't you come down to the Chicago Mercantile Exchange? I work on the floor. There's a lot of, you know, it's a pretty cool place. There's a lot of money in trading, and, you know, you may like it. So I said, okay, Gary, I'll take you up on it. He said, when you get down there, you just page me and I'll get you a guest pass and you could, you know, walk around the trading floor. So I took the train. You know, back in Chicago, you have very good mass transportation. I took the train, and then I got on the L, and I get off at what I think is the Chicago Mercantile Exchange. So I'm walking around, and I don't see a trading floor, and I don't know, you know, if I'm at the right place. And I ask somebody, I go, where's the trading floor? And they give me a strange look, and they go, well, we don't have a trading floor. You're at the Chicago Merchandise Mart, not the Chicago Mercantile Exchange. So, you know, I'm a persistent guy. It was a beautiful day in Chicago. I could have gone to the lake and just said, oh, well, you know, I'll do it another time. But I got back on the train of destiny to the Chicago Mercantile Exchange. And I went up to the gallery where you could see all the different trading floors, and a big pit back then was the pork bellies. And I saw guys buy, sell, buy, sell. And I go, wow, this is like financial Disneyland. So I paged Gary, and Gary got me onto the floor. And I went around from desk to desk and said, you know, I'm interested in learning the business. I'd like to work here. And a company named Dean Witter took me up on it, and they hired me to be a runner. And back then, they just began to trade currencies. And so as a runner, I would take orders that would come from all the different branch offices at Dean Witter to the filling broker. And they just opened the IMM, which was the International Monetary Market, and they were trading gold, but they were trading currencies. And everything else was on an electronic board, but back then, they were actually trading currency futures on chalkboards. Okay, the bid, the offer, the last 5 trades in chalk. So I saw it from its embryonic stage. And then after a certain period of time, I got my Series 3 license, and I became interested in trading, and I took a course at the Merc in technical analysis, and The first book I used was Edwards and McGee's Technical Analysis of Stock Trends, and that's where I learned conventional technical analysis. And it was always my dream. It was always, hey Hasselhoff, it was always my dream to have a seat. So a lot of the guys I grew up with in Skokie, Illinois were already set up with their seats and their Mercedes and their condos downtown. And I was just, you know, the lower end of the caste system in a yellow jacket without my badge with my initials on it. And I said, one day I will come back here as a member. So learning how to trade off the floor, I said, I don't have to be here in Chicago and freeze my butt off every winter. So I took I traveled to LA, where the company I was with had a branch office, and always wanted to go to LA since I was 10 years old and watching the Rose Bowl with 3 inches of ice on my window. And people out in Pasadena getting a suntan. Plus back then in junior high, Jan and Dean, the Beach Boys were popular, and you know, 2 girls for every guy. How can you not want to go to California, right? So I did, and I was a broker, and eventually I had my own IB, but it took me 10 years to get back to have a seat. And I went back there, but I found, and it's like a lot of dreams, the journey was really the interesting part. Once I got there and I had a seat, I said to myself, okay, now what? Because you know you're driven for something for so long, there's actually a little bit of a psychological letdown. I didn't like trading in the pit because I really learned off the floor to trade and be able to look at different markets. And there was this thing called out-trade risk, where if you thought you did a trade with someone, but the next day it wasn't acknowledged, you could come in long 20-30 or short 20-30, and based upon the opening, you know, I've seen people lose their seats over an out trade. So I would just hand off my order, let someone have the out trade risk, and go upstairs, and then eventually headed back to the West Coast. So that's my story of how I got involved in the business. And I thought that you guys might be interested, that see, like, you could be wrong in the market. I was wrong about my first location, going to the Chicago Mercantile Exchange, but you have to persist. Really the secret is there's no secret, it's hard work and persistence. And I really enjoy this reinvention of myself as a coach and a mentor. And it's really rewarding. Being a broker, I really didn't care for it that much. There's that inherent conflict of interest, and the internet broke the model anyway. So I've been preparing, hey Dimitri, I've been preparing for what I'm doing now with Steve and Blake and Nick. And, you know, I used to be interviewed. I was pretty good at self-promotion. I got on CNBC a few times. In California, I was on every radio, financial radio and television station. And I had this concept, who better to ask the questions than someone who's been asked the questions on the other side of the mic. So I'm really enjoying this stage of my career, and enjoying working with Blake and Steve and Stelios and Nicola and Grega and all of you guys. So that's a little bit of my story. I look forward to having our FACE community grow like a mushroom, for people that are struggling to have epiphanies and to begin to believe that they can do this. And with that, I want to wish everyone a good day. I want to take a vote. Do you guys want to open early for the NFP tomorrow? Give me a Y if you want. And thank you, Hasselhoff. It's good to be cool. Great to be loved. Oh yeah, my karaoke career, yeah. Well, I'll tell you about that, Chad. I started doing karaoke. It was my marketing strategy to meet women. All right, I'm just being, I'm being honest with you, okay? And that's how I met my wife. That's how I met my wife. So I don't go. I really don't go. I really don't go that much anymore. Mission accomplished, you know what I mean? So thank you everyone for your great thoughts and looks and hanging out with Steve and Grega, Nick and Blake and me. And you know, we're only into our second month here. Appreciate all the support of people that are taking subscriptions up with ForexAnalytix that would feel like there's something missing from their workstation if they didn't hear the clicking sound of updates, either on their phone or on their laptop. So with that, Steve, thank you today. And Nick, thanks for hanging out. And Stelios, Grega, and you face people. I can look you in the eyes because you're here in face. See everyone tomorrow for the NFP. I will wake up. You like that, Artie? Okay, I will wake up early. Hey, Brooks, and we'll open 5 minutes before the number tomorrow. So tell all your friends that we're going to react to the reaction to the NFP tomorrow. I'll see everyone then. And remember, and this is for you, Stelios, because I saw you tweet this. Don't just count your pips. Count your blessings. And I don't care who you are. There's at least one thing to be grateful for. Adios, my trading warrior brothers and sisters. See you for the NFP tomorrow. That's why he has a gun. All right, thank you, Toby. Adios, amigos. See you, Eugene. See you, Carlos. You're welcome.